bills. Prime Minister and Minister for Finance, Economic Development, Youth Economy, Justice and National Security.
Mr. Speaker, I beg to present for second reading a bill shortly entitled Income Tax Amendment. Mr. Speaker, in my first budget to this Honorable House, I stated that we would cause a review to be done of the Income Tax Act in keeping with a promise that we made through the St. Lucian electorate, Mr. Speaker. We promised that anyone whose income was below $48,000 a year would have paid no taxes. So this is the first stage, Mr. Speaker, in the keeping of that promise. This is the first step. Mr. Speaker, anyone in this country who gets less than $25,000 a month will pay no tax. This is better than the $18,000 before, Mr. Speaker. But you know, Mr. Speaker, that may sound, you see, Mr. Speaker, $18,000 a month, a year is $1,500 a month. $25,000 a year is $2,038 a month, Mr. Speaker. Well, Mr. Speaker, if you never, your salary was never $1,500 a month, or your parents never had to send you to school on $1,500 a month, you would laugh when you find that you get $2,000 a month and you pay no tax. You would laugh. Because you know the reason why you'd laugh, Mr. Speaker, is because you do not understand what it means for relief. Mr. Speaker, let me say something about the Income Tax Act. I met a lady at church on Sunday, Mr. Speaker, and the lady came to me and she said to me, "Thank you for the concession to pensioners." So I wondered, what was she talking about, Mr. Speaker? I said to her, I wish it could have been more. You know what she told me? And this is profound, Mr. Speaker, this is profound. She said to me, the increase helped me to pay my water bill. But Mr. Speaker, this is the feeling that you have when you deal with regular people and you are not born with a golden spoon. Because that old lady, Mr. Speaker, the 4% increase, she said to me, "Prime Minister, I'm praying for you." You know why? Because she said she got relief in her water bill, Mr. Speaker. And that is what keeps me going in this politics. But Mr. Speaker, we hope, of course we hope, we wished that we could have done more. Of course we could have done more. And we want to do more, Mr. Speaker. But the fact is, incremental, Mr. Speaker. We do it incrementally and it benefits people, Mr. Speaker. So I'm very proud to stand in this Honorable House this morning and ask Parliament to approve of the Income Tax Amendment Act, Mr. Speaker. Mr. Speaker, it means that more than 10,000 people in St. Lucia will pay less tax. I want to make it say it loud, Mr. Speaker. More than 10,000 people in St. Lucia will pay more tax, or will pay less tax, or no tax. To be exact, Mr. Speaker, according to the calculations from the Inland Revenue Department, about 14,000 people are going to be paying less tax from January next year. 14,000 people, Mr. Speaker. At a time of fiscal challenges, at a time when the world economy is going through serious strains. You listen to the news. You know what's happening in every country in the world, Mr. Speaker. In St. Lucia, 14,000 people are going to be better off because of the actions taken by this government, Mr. Speaker. 14,000 people. So, Mr. Speaker, these amendments, that is the first This is the first benefit from this amendment, Mr. Speaker. Mr. Speaker, the second part of the amendment relates to the amendment to section 44, Mr. Speaker, which deals with the allowances, Mr. Speaker. Now, Mr. Speaker, when you file your tax returns, you are allowed allowances, in that you're allowed a number of allowances when you file your tax return, Mr. Speaker. Let me tell you some of these allowances. Some of these allowances, Mr. Speaker, and that is in your tax return as that you always see. Before, there was a personal allowance of $18,000. That has been increased, as I said, to $25,000. Then there were deductions for your spouse, medical expenses, that was $400. But Mr. Speaker, we are making an adjustment to medical expenses, which I'm going to deal with in a little while, Mr. Speaker. Maintenance of children, Mr. Speaker, $1,000 per child. Take note. Alimony. You could deduct your alimony, Mr. Speaker. Education for certain children. Education for children, Mr. Speaker. And we're going to make an adjustment on that in a while. We spoke about deduction for higher education, which is $5,000. Send your children to university, you're allowed $5,000. We're going to speak about that one also in a while, Mr. Speaker. Then there was allowance for housekeeper, allowance for dependent relative, pension income allowance. Anybody who got $6,000 or less would pay no tax for their pension. That was the allowance, Mr. Speaker. There was contributions to life insurance to a limit of $8,000. National insurance contributions, $3,000. Deduction for mortgage interest, maximum $18,000. The insurance on owner-occupied residence, maximum $10,000. And there was property tax, Mr. Speaker. There were donations for an upkeep, a deduction of costs for your upkeep and maintenance of your house. If you paint your house, or not capital expenditure, not expansion, but maintenance of your house, you're allowed $10,000. There were donations of gifts for approved purposes, limited to 25% of your accessible income, Mr. Speaker. Contributions to building societies, deduction for student loan expense, purchases of new shares in resident public companies, contributions to an individual registered retirement plan, contributions to an approved pension fund, contributions to a registered ownership savings plan. The one for the pension fund, Mr. Speaker, stood at $8,000. Contributions to a registered ownership savings plan, Mr. Speaker. Deductions for professional subscriptions. Deductions, and that was an initiative which we did last year. If you road rehabilitation, you got a $5,000 tax deduction. This is still available, Mr. Speaker, although some people want us to fix roads in rain. Deductions of expenses incurred in hobby farming, Mr. Speaker, $5,000. Fees paid for preparation of financial services, Mr. Speaker. So these were the allowances that were allowed for every taxpayer. The adjustment, Mr. Speaker, that we are doing is we are capping these allowances at $30,000. So no taxpayer can claim more than $30,000 for these allowances, with one exemption. So, example, in the $30,000, you have to keep the limit for the allowances that I spoke of there. You can't increase the limits. So, you cannot claim for your child more than the stipulated amount. Nor can you claim for your shares in a resident public company. You can't claim more than $5,000. But, Mr. Speaker, two exemptions, two. One of them, Mr. Speaker, is mortgage interest. Because of the way house prices are increasing, materials are increasing, Mr. Speaker, you can claim your entire mortgage interest. So if your mortgage interest comes to $30,000, you can claim the entire thing. If it comes to $18,000, you can claim the entire thing. Before, there was a cap of $18,000 on mortgage interest. On mortgage interest, there was a cap. So if you claim $30,000 on your mortgage interest, then that's all you can claim. Yes. Everything else is not allowable. It's capped at $30,000. Also, Mr. Speaker, for student loans, the reason why we did that is because, again, education. So then, if you decide to send your children to university, you can claim the interest, Mr. Speaker, up to $30,000. Again, that is to relieve people who are sending their children to school, Mr. Speaker. So, in summary, Mr. Speaker, no taxpayer can claim more than $55,000. But there is one caveat: medical expenses. Because of the state of our medical expenses, Mr. Speaker, you can claim the entire amount that you want. You can verify that it was spent for medical expenses, not for cosmetic surgery, etc. Not for cosmetic surgery, not for any. You can't just say you went to a doctor for augmentation or to fix your face and things so, and then you claim it, Mr. Speaker. No. Medical expenses. Necessary medical expenses, Mr. Speaker. Not plastic surgery, etc. Medical expenses. You can claim the entire amount. The entire amount you spend, once it's verifiable and once you can prove, Mr. Speaker, that is what you spent it for, you can claim the entire amount. So you can claim the 30 plus the 25 plus the medical expenses. Then there's one more change, Mr. Speaker. There's one more change. There's one more adjustment, which is the adjustment in the tax bands, Mr. Speaker. Currently, there are 4 tax bands, Mr. Speaker. Tax band 0 to 10 attracts a rate. So after, when you have your income and you subtract your allowances, Mr. Speaker, then you calculate your taxes according to the tax bands. Currently, there are 4 tax bands. 0 to 10 attracts $10,000. $10,001 to $20,000, you pay 15%. $20,000, $40,000, you pay 20%, and the remainder above $40,000, you pay 30% tax. We have narrowed, we've reduced these tax bands, Mr. Speaker. So $0 to $15,000, after you've taken out your allowances, your tax rate is 15%. $15,000 to $30,000, your tax rate is 20%. And above $40,000, your tax rate is 30%, Mr. Speaker. So, Mr. Speaker, this means that we have narrowed the tax bands. And what I said earlier, Mr. Speaker, what I said earlier is because of these changes, the proposed scenario is the government is going to lose in the first quarter $3.5 million in revenue between January and March because of these changes. And for the year, the government is going to lose about $14 million through direct income tax. But we are putting that money back in the hands of the consumer for the consumer to spend and use for his disposable income. But, Mr. Speaker, 14,000 people, and I want the civil servants and the policemen to hear that, all of those who get less than $25,000 a month, a year, they are going to pay less tax, Mr. Speaker, or no tax at all. It was $18,000, it's gone up to $25,000 a year. So anyone, and there are many people, that is their salary. Many people, Mr. Speaker, who get less than $25,000 a year will pay no tax, Mr. Speaker. Mr. Speaker, that would mean some amendments to some sections of the Income Tax Act, Mr. Speaker, that I have spoken to earlier, an amendment to Section 44, an amendment to Section 54, an amendment to Section 58, and an amendment to Schedule 5, Mr. Speaker. Then an amendment to Schedule 6. These are the amendments in the original Act to give effect to the changes that I have outlined, Mr. Speaker. Mr. Speaker, I'm very pleased that we can come to this Parliament, and in these times, we can still give relief to the consumer, particularly the people who earn less than $25,000 a year. Very significant. Might sound small and laughable, but very significant, Mr. Speaker. We wish. And this is in the whole package of incentives that we are giving to the people of St. Lucia to put them first, Mr. Speaker. Educational assistance, 1 laptop, housing assistance, Mr. Speaker, paying facility fees, increasing paying CXC fees for English and Maths, a whole package, Mr. Speaker, plus this income tax relief to help and support the people of St. Lucia, Mr. Speaker. The people of St. Lucia who their income is at a particular level, Mr. Speaker. Mr. Speaker, I thank you and I urge members to support the legislation.